Good morning. This is Nick Stern with Robert L. Stern Financial Services. Thank you for tuning in. It's good to see you. I hope you're enjoying the beginning of summer. I'm a certified financial planner here, and what I wanted to talk about for June's topic discussion, or briefly talk about, was chasing the quick dollar and some of the pitfalls that go along with doing that. So what do I mean is you see something in a publication online from one of your friends, and they're saying that this particular investment has run up significantly and it's a really good situation and it makes sense to buy it. So then you look into it and then you buy it. So then the security goes down and then you sell it, so you took a loss and you are left with maybe a bad taste in your mouth, or you just aren't real happy about them. I mean, no one's really happy about losses. But anyway, that's a very common scenario about trying to chase a quick dollar or looking to invest based solely on momentum. What I mean by momentum is a security has momentum, just as it sounds, and continues to rise toward the upside, namely beyond what its underlying business or fundamentals of the business allow for. So oftentimes when you're looking at something that's purely based on momentum, along with that momentum comes with speculation. So when you have the combination of speculation and momentum, you have the momentum, and Mr. Market or Mrs. Market and its investors like it, so they continue to buy it, so the stock price continues to go up. But then also, part of the reason for buying is just the same reason you are. It's some sort of promise that is supposed to happen in the future. And whether or not that promise comes true at the moment is irrelevant, but when the promise is supposed to be met and it doesn't, one of two things happens. One, there's some sort of justification and the security continues in its path, but oftentimes there's significant volatility, namely towards the downside, because the promise wasn't met and all that price appreciation was based on this promise being met. So when you are looking to chase the quick buck, I would, one, advise you don't look to chase the quick buck. Look to be an investor, meaning take a longer term approach, consider your goals, consider your objectives, and consider your financial situation and how it all ties in. But either way, taking a long-term approach, I'll just throw an example out there. Warren Buffett, one of the most successful investors ever, is an attestation to taking a longer term approach when it comes to an investment. But the second, if you feel that you need to chase the quick dollar, is look at price action. Look at how it's been trading for the past year. How much has it run up? What's the 52-week range? What's the 20-day, 200-day moving averages? All those things, while don't determine whether or not it's a good investment decision or not, because the only thing that can determine that is you, your situation, your goals, etc. But those factors are important, and that could also give you an idea of whether or not it's more towards the top, more towards the bottom, more towards the middle. But again, it's just that it's an idea. It's not set in stone. It could go any which way. The thought is behind at least having a good understanding of all those different factors can maybe, and I really emphasize maybe, give you a better thought or grasp of how the security that you're buying is valued, meaning whether or not it's potentially undervalued, fairly valued, overvalued. For example, if something has run up, like a biopharmaceutical company, that is supposed to put out some sort of significant game-changing drug. So investors catch wind of that, and the announcement of it is coming out whether or not they made it to the next phase next month. The stock has been, the security has been running up for a couple 100% in the last year. So a lot of speculation is already built into that stock price. So the decision, if it's favorable, it can potentially make the security continue to go up. But if it doesn't get met, there's probably significant downside in that. So that is a big pitfall of chasing momentum and chasing the quick buck, because you're basing your decision on something that hasn't happened. And often we're in a marketplace where a lot of investment decisions are made based off that. However, a longer term approach allows you, one, you can look at the underlying business of the security that you're buying or investment that you're buying. So that gives you a little bit of a better understanding and say, okay, is the price of this investment actually supported by what it's doing, its profitability, etc.? Or am I just solely buying this because somebody said I should, and it's based off of some sort of speculative promise that may or may not happen? And also another pitfall is you have to consider when you are looking to purchase something like this, whether or not you're getting it at the beginning, which is obviously impossible to tell until it already happens, or if you're buying something at the very top or after a big long run. Does it continue to run? Does it go down? How do you determine, as well as if it does go down, how do you determine whether or not you're going to continue to hold the investment on towards the downside? And also that type of stuff doesn't always work either. So I would say that the takeaway is, one, be an investor, not someone looking to chase the quick dollar. I mean, the adage goes, a broken clock is right twice a day. So I'm not always saying that people don't have some sort of skill, but part of the chasing it, maybe you happen to get a little lucky and you're in at the beginning of a very significant upcycle. But if you're getting in late, there are significant risks to doing that. Two, if you have to do it, make sure you understand why you have conviction in this. Don't just base it off somebody that said something or somewhere that you read. If you're going to do it, if you're going to invest in something, have a really good understanding. Know what you're investing in. Know why you're investing in. Even if it happens to be speculative investing, understand the speculation and understand why the security price has gone up, what could make it go down, and really have a good grasp on all the ins and outs of the investment that you're looking at. Thanks for tuning in. I really appreciate it. If you have any questions, you can subscribe to our videos, and the most previous one is right up here. If you'd like to take a look at our website, right up here. And if you'd like to subscribe to my channel, right down here. Thanks for tuning in once again. I'll see you next month.